Hello, guys. Today we're going to talk about best investment for beginners. So, for starters, if you're a young professional or you have gotten to a place where you have some money that you wish to invest, I think that these ideas are going to be the best for you to take that extra step. So at first, if you already have a savings account, it's not a bad idea to keep your investment in a savings account, but it has to be a high yield one. What does that mean? So, for example, you have to take into account where you live and what bank are you using and what is the interest rate that they are charging you for leaving your money inside a savings account. So, for example, if you have a bank account that is charging you more than it's giving you for leaving that money there, of course, it's not going to be a good investment. So you have to only leave your money in a savings account if it's going to be a high yield. This means that it gives you higher interest rates than the inflation in your country, and that it's not charging you negative interest rates, because sometimes with a monetary policy of a country, that bank would want to incentivize spending. So it's going to actually charge you money for leaving your money with them in the bank. So always remember, if you want to leave it in a savings account, it has to be a high yield one. And it's not going to give you a lot of profit because it's a very low risk investment, because you know that the bank that you're using, it's probably a safe, strong institution. Probably with a lot of laws and regulations that you know you're not going to lose all of your money. So low risk, low reward. So that's probably going to give you a low profit, but it's still a good option if you are looking to invest. It's better than having your money in all cash lying around your house, like old school. So what else? So there's other options, like I mentioned, low risk means low reward. So there are another more safe options when you are looking to invest as a beginner, especially when you don't have enough experience. So another low risk, good investment for beginners, I would say it's government bonds or even private bonds from a private company. But a government bond, it's, for example, in the United States, it's a treasury bill. So it's a T-bill. So basically, you buy a bond. You buy the bond from the government of the United States, and they give you an interest rate. In generally, it has to be higher than the inflation rate, of course. If not, you just leave your money in a savings account. They give you a rate and they say, okay, so when the bond expires, I'm going to pay you back the amount that you paid for the bond plus an interest rate. So for the T-bills, I think they're around between 3 and 4%. So if you invest $100 in a T-bill for a T-bill that expires in a year and the interest is 3%, you're going to get back at the end of that year $103. So it's low reward because it's very low risk. You are putting your trust in the government of the United States or in other type of public institution wherever you're from. So it's low risk, so you get low reward. But it's an easy, very easy, accessible way for citizens to invest their money in something that's probably going to give you a little higher rate than just a savings account. It's a good option. There's also private company bonds, so they work the same. Some bonds, they give you monthly payments, like coupons, extra coupons, plus the whole amount after the bond reaches maturity, with a lower yield, maybe, or no coupons with a higher yield when it expires in maturity. So this is a good investment. It will depend, of course, where in what country you're investing in the T-bills from. But for example, me personally, that I'm Mexican, we have a page that's called CETES Directo that's directly linked to the government, to the Secretary of Money, per se, to the Secretary of Economy. And in that account, you just register with your ID, Mexican ID, with your social security number, with your name, address, bank account details, etc. And you can start buying as many bonds as you want, as many bonds as they are available in the government. The government puts them towards availability, right? So you choose how much you want to invest, you choose when you take the money. You can also take the money before a bond reaches to maturity, but it depends on the bond, because sometimes you can't. So I think it's a good investment, especially for long term. If you have a lot of money just sitting around, you're not really looking for invest in an activity that is going to take you a lot of knowledge or a lot of time to go back and forth, for example, like trading or something like that. It's a very good option. It's low risk, and you just leave it there, and you take a trust that the government's not going to fall any day or any year that your bond is going to be in maturity for. And when you're ready and the bond expires, you go and get your full amount of money. It's a really good option to start investing and to start getting the sense, the idea of how a high yield works. So you're going to start to see the profit building on your original capital amount, and I think it's going to give you a good sense of what investment is. This is practically making your money work for you. So another option, if you're looking for investing, but it's a little more time consuming and you do need to learn a little bit previously, because contrary to popular belief, it's not like gambling. It does have a qualitative and quantitative science behind it. And this is investing in the stock market or in the options or in the Forex market. So basically, a stock is a part of a company, a public company that launched its IPO, and they decided to sell the shares of the company. So you can technically become the owner of a little part of that company. You can hold the share and even get dividends if it's the policy of the company, or you can buy and sell said shares. What basically, how do you make profit in that market is you buy a share that is underpriced per se, or a little underpriced than usual, because you're expecting that market to grow, so that share to amount in a higher value, and then you sell it when you see that it has reached the value that you thought it's going to be their maximum. Or you can do the other type, that is shorting stocks, where you bet, or you think that the market's going to go the other way. So you sell, you see and buy a share that you think it's overpriced, and you short it. And well, basically you buy it, but you borrow it. So you borrow a share that seems overpriced, and then when the market goes down, because you believe that that share was overvalued, and now that the market has actually reflected the real value and it's lower, then you buy that share, you return it to the one that you borrow it, and you make that profit as a dividend. So I do not recommend investing in the stock market as your very first investment experience, because it does take a little bit of knowledge, but it's easier than most people think, and it's actually a great market that can make you a lot of profit. The Wall Street, New York Exchange market, it's actually the most popular one and the best one to do business in, because there's a very volatile volume of stocks that are being moved every day. So basically you can take advantage of this and do intraday trading. That's basically, you can sell and buy shares the very same day and do a little profit or big profit if you have a good amount of volume of shares. And this is really good for someone that's just dedicating some time to that and doesn't probably have a full-time job, or it's just wanting to do this as a full-time job, right? So intraday trading, it's really popular. It's really risky, I would say, but it can yield a really high amount of profit. And if you do your homework before, and you always take into account the historic data of that share, you take into account the qualitative and the quantitative data of the company that you're investing in, the sky's the limit, honestly. And in tendency with the economic growth over the years, if you hold a share that's probably 10 years old, it will tend to go higher in value, of course, because the economy is growing, the revenues are growing for each one of the companies, or the vast majority of them. So your share will obviously increase in value. So you can also, instead of doing intraday trading, you can also do long-term investing with the stock market. Another thing that you can invest on is options. That's similar to the stock market, but it's actually contracts. So it's a contract where you can hedge a price for a commodity like energy, oil, etc., gold, and sell that contract because you're hedging it at a lower price that it's going to be in the future in the market. So you can actually have that contract that says, look, I have a contract with a seller of energy saying that in 3 years I'm going to buy that energy at a lower price than it's actually going to be in that 3 years. So someone's going to say, I actually need that energy for my business, and it's going to buy it from you with a premium. So those contracts are valuable to companies that actually use the commodities. Of course, you can actually have the commodity delivered to you, but if you're just an investment, you're not going to be investor. You're just not looking to have energy, oil, barrels of oil, or bricks of gold delivered in the maturity time. So it's basically just an investing opportunities when you have better price contracts. Then another thing you can invest on is a certificate of deposit. So it's this is a thing that is going to be based in the policy of your bank account. So this certificate of deposit is the bank is offering you to pay you a premium or a high yield if you leave a certain amount of money in your savings account, or any other type of account for a certain amount of time. Why? Because obviously they're a financial institution, they're leasing said money to other players, and they need cash and liquidity to be able to do that. So if they say, I need to loan someone $100 and I need your $100, I will pay you $115 next year when I get that loan back, just so that I make sure that I have the $100 in your account without being touched. And again, this is low risk, maybe low reward, but it's you know that your money is going to be safe in your bank account. So those are the different types of investments that I would recommend for beginners. So basically you have the low risk, low reward, really easy, money makes money for you, that it's a certificate of deposit, high yield savings account, and government or really solid private enterprise bonds. Those are the ones that are low risk, low reward, low time consuming, and they give you a taste of what investing is like. So I would really recommend to start with those. And then you have something a little more complicated, but that it's more adrenaline given, and it's going to maybe give you a really, really high profit reward if you do it correctly, and you do it with background knowledge, and you do it with technical knowledge and logical, rational thinking instead of emotional thinking. It's going to be investing in the stock market, investing in options, and investing in commodities or forex, that is foreign exchange currency, that it works the same as the stock market and the options market practically. You buy low, you sell high. For these types of market, you probably will need to be registered to a brokerage and will have to pay a broker a commission every time you do a transaction. So be aware of this. Brokers can give you advice, but they are making money even if you lose or win money. They're just making money on making you make the transaction. So it's important to take into account this if you go directly to a broker. Or I know that in the New York Stock Exchange, you can go directly without a broker to start trading yourself, but you do need a platform. So you need to buy the platform, and you need a minimum of $3,000 to start, and an American address. So investigate in your own country if you have a stock exchange and what are the requirements to start investing in it. Obviously, the New York Stock Exchange has a lot of volume, has a lot of activity every day. for example, in Mexico, we have the Mexican Stock Exchange, and we just have like 140 companies listed, while the New York has like 2,000 and something. So obviously, if I'm doing intraday trading, probably my shares are not going to move a lot, and I'm just going to win little cents of difference if I'm just doing like selling and buying in the same day. But it depends on country to country, and I really recommend starting with a low risk, low reward, and investigating a little bit the requirements of investing in the stock market, and seeing some of the market trends that are going. For example, I think that with all of the technology that's being developed, maybe the time to invest on technology would have been like 10 years ago. But with all of the technology, again, that's being developed, maybe we will need strong software companies of cybersecurity, of IA, of data centers to keep holding that a large amount of data. So think about the next trend, and again, do your investing decisions with your head, with rationale, with logic, with a lot of patience, and not with emotional thinking. Humans tend to do a lot of emotional thinking, and it's going to ruin your investment in the long run. The final advice that I can give you is don't play with money that is a necessity for you. So if it's money that you have to pay the rent, to pay the bills, do not use it to invest. Especially when you're a young investor, this will only create a negative emotional feeling towards investments. You're going to put a lot of hope into it, a lot of emotion into it. You're not going to do it rationally, and you're risking your money. Of course, if you have a low risk investment like a high yield savings account, it's not going to be that risky, and maybe you're not going to lose the money. But if you're investing in the stock market with a lot of fluctuations in the market, and you are quite new to it, and you're investing money that you actually need, it's going to give you a bad taste of investing. So please, now that you are young, and if you don't have responsibilities, and maybe you have a little bit of time, start investing, start understanding. And if you win 70% of the time, at the long run, you cannot lose. So think about this and start investing.